Yo, yo, yo. Thank you to everybody who was hanging out in the live stream earlier today. Very sick day in the live stream. Very good vibes there. Had a good time. And I don't want to do like a full technical update here because if you watch the beginning of that live stream, you can kind of get an idea of where I stand on like the technicals. But instead, what I want to do is I want to put AMC's recent price action in a larger context, because I was asked on Twitter if there was any historical thing, basically, like any instance for us to look at from a technical perspective that is similar to the situation that AMC is in right now. Which I think is a fair question. You know, and it's an interesting one, right? Because it's challenging in a way. And so what I wanted to do was, first off, it made me wonder and want to compare AMC to itself, first of all. But it also made me want to look at bigger companies or other companies that have been around for a longer time that may have gone through potential similar circumstances. And the first ones that I thought about were Apple and Amazon. So what we're going to do is I'm going to run through some brief things for AMC's chart, what I'm looking at, just in the larger context. Very simple. And then I'm going to show you a few examples that I picked out of Amazon and Apple playing out similar things. So the first thing that I wanted to note here, by the way, if you haven't already, make sure you smash a like on the video, comment down below. If you enjoy this type of analysis, it's really important that you do that because basically it tells the YouTube algorithm that I'm doing a good job and it sends more people to me. And if it sends more people to me, it makes me know that I'm doing a good job, and that means that I'm just going to keep doing this. So if you enjoy this type of analysis, it's important you do that. If you don't enjoy this type of analysis, then dislike the video. So thank you so much in advance. And you can comment down below whatever your thoughts are. So what I've been talking about is this macro falling wedge that we're in for AMC, right? Falling wedge is typically a bullish reversal pattern where you have dissipating sell pressure to the downside and aggressive sell pressure on the top line, right? So price is getting pressed down more aggressively from the top end than it's being pushed down on the bottom end. So it just is a signal that bears are getting weaker as time goes on, right? And this is by the green lines that you're looking at here, okay? And so AMC is down 75% from its all-time highs, 75.5% from its all-time highs of $73. And this most recent move is about 60% down from the recent highs on November 16th of $44.75, roughly. This is interesting because on this major drop that AMC had here from February of 2020 all the way down to its all-time low on January 5th, it was a 75% drop. And also the buy button drop, if you measure from the regular market hours high, was about 75% as well. So that's pretty interesting. It's not anything that you necessarily... this is just it's just an acknowledgement. It's just something that I noticed. So don't be like, oh yeah, he said it's only 75% and then that's it, right? Watch the stream/update that I did to get a better sense of where I think that downside pressure could possibly take us. But you see a similar sort of thing here where you have this very aggressive downside pressure from the top, right? But you don't have it so much from the bottom, right? So price is getting pushed down really hard whenever it bounces up here, but when it gets down, the actual lows aren't as impressive. Just put it that way. If the chart was flipped over from a buyer to seller standpoint, it would look like buying pressure was slowing down if you flip that upside down, right? That's kind of what a falling wedge is versus a rising wedge. And we've talked about rising wedges before. I'll just show you an example of one that AMC played out recently. Well, not really recently. I guess recently is relative, right? But you can see here that you had this similar effect, right? Where price was getting this aggressive upside move, right? And the tops of the run were just getting weaker and weaker and weaker until ultimately you got this this like doji candle that's essentially just like this uncertainty basically in the market, right? Bears can press down and then bulls can react to them. But when you have this sort of thing where it seems like bears are kind of just, oh yeah, hit me with your best shot, you know, and then you just kind of, that's a good signal that you're going to get sent down, right? And then we played out this smaller falling wedge just to show you guys that falling wedges are certainly important patterns, right? Wedges are important patterns. So, so let's look at some other examples, some historical examples on Apple's chart first. Back here in, let's see, what is this? Between 2012 and 2013, this falling wedge played out. It took about a year on Apple. Apple was down 40, let's call it 45%, from its recent highs, which were its all-time highs at the time. And really the all-time low, well, here, the real low here was 210 days, but then you had this bounce and then you got dragged down even further. Well, not even further, but again, you got dragged down for like a double bottom. That was 280 days. So, and keep in mind that going into this was this rally, which lasted from when Apple was $2.94. This is this stock has been split since then, so it wasn't actually $2.94, but it was the equivalent of a 750-ish% run from February of 2009 until September of 2012. So 3.5-year rally led into this. So I'd imagine that the media hype was at an all-time high for Apple at this point. Probably this is a rising wedge that it was in. Big, nice macro. Ooh, a macro rising wedge. You see its touch points here. You had a bear trap here. You got sent back up. Boom, boom, boom. You get sent down. Yeah, these wedges, you know, wedges work. Maybe that'll be the title of the, no, I think AMC in Context will be the title of the video. AMC in Context. Let's look at another one. This is 2006, January of 2006, or December of 2006, highs of $3. Again, this is after split, so it probably wasn't actually trading at that specific price. You have this driving down of price here, and then you see this flattening bottom that's kind of developing. Usually you can pull a point from the before the reversal, and then you can kind of just draw along the important touch points. You see you have a bounce here, bounce here, bounce here, bounce here, but you can see that selling pressure is wearing down. As on the top end, the selling pressure is very aggressive still. You have a bull trap here, but then you get sent back underneath this trend line. You have a bear trap here, and then you get sent right up. And so so that was a 40% drive down over the course of 217 days. Yeah, 217 days is a weekly chart, by the way. All right, and then I got a really good one back here too. This is a good one. So this is, whoo, oh man, this is a big daddy right here. I think that this was when Steve Jobs was removed as chair of the board and even CEO at during this era of Apple. This was, so the peak was the equivalent of 65 cents or so on March 1991. Okay, so listen. Apple, I just want to put this in full context for you, okay? Full context. Now, remember, AMC's drops were 75%. It's been 75% over the course of, since June, right? And by the way, what I'm looking at here is all-time highs, okay, at 67, 65 cents equivalent. Apple is currently trading at $169.80, okay? So I want you to understand for a second, and I know, look, I'm not saying that AMC is going to take 30 years to rally, okay? What I am saying is, understand that for every dollar that you put in here At this point, this all-time high right here at 1991, okay, for every dollar you put in, okay, you would have almost 2 shares of Apple, okay? So just bear with me and pretend this is 50 cents, okay? Say you bought here, all right? You would have 2 shares of Apple, which would be worth like $340, okay? You understand what I'm trying to get at here? All right? For every dollar. So if you put $1,000 in, what is that? $1,000. You have 2 shares for each dollar. What is that? 2,000 shares? It's like $40,000. No, that's wrong. That's way too low. Hold on. Hey, I do charts, not math. All right, give me a sec. All right. All right, no. You put $1,000 in. Okay. All right, Dave. Come on, Dave. You got this. It's a little late, guys. 10:30. I gotta go to bed. All right, yeah, $1,000. 50 cents. Trust me. We're gonna get there. All right, look. You got 2,000 shares. What's 2,000 times 170? What? 300 and I knew I was close. I said 34,000. I had the right idea. $340,000. I mean, look. I wouldn't be complaining, all right? That's a pretty good return. All right, so let's look, okay? Just look at this. That is the opportunity that you give up if you sell at any point in this, okay? If you sell and you never buy back in at any point in this, you are giving up $340,000. This is a little dramatic, but bear with me. This thing from its all-time highs over the course of 2,500 days, okay, from April of 1991 to December of 1997, January of 1997, it went down 82%. 82%, okay? I want you to understand that no normal human being, individual investor, okay? Not no, but like most, would not be able to hold on to this position, especially if it was a meaningful one, okay? If they had a lot of money in that position, they would not, normal people would not be able to do this, okay? And in this era, 75% from this peak in July 1995 to January 1998 was 75%. So within this monotonous, just send you down and send you up and then send you down and up and down and up. Within this, you have another 75% drop. All right, you're just getting Composite Man. You know, he's wrestling you around. Okay. If you would have held your percentage gain, we'll do from the top, and we'll do both because it's fun just to think about. Okay, your percentage gain tomorrow, if you sold, would be 26,000% returns. Am I saying that AMC is gonna give you 26,000% returns? I don't know. It's possible, right? I don't think anybody was thinking that Apple would give them 26,000%. What about from the bottom? 160,000% return. 147,000% returns, okay? I don't think anybody was thinking that that is what was going to happen to them back here, okay? Actually, on the contrary, I would think that people actually hated this stock at this point in the late 90s. Hated Apple. No retail interest in Apple when this was going on. I just want you to know that, okay? I'm just trying to put it in perspective. And then the last Apple example, and maybe we should cut the video after this. I don't know. I'll show you the Amazon ones too real quick. I think I only have one or two. The 1985, you had a 55% drop that was wrapped inside of a 79% drop from 1983 all the way down to 1985. Okay, 79% and 55%. I want you to understand that at the bottom of this, you were looking at the equivalent Apple price of 6 cents. 6 cents. Okay? And if you would have held just because this is fun, and then we're going to move on to Amazon. If you would have held that, I'm not saying AMC will do this. This is not financial advice. This is just observation. I'm just observing 75% drops in falling wedges. You would have 266,000% returns today. Good for you. Congrats. All right. Look at Amazon. Sounds like the kids are home. All right, Amazon.com bubble. Boom. Gets sent down. Falling wedge forms. You see this weakening to the downside? Yeah. This was a 95% drop, okay? Amazon was trading for the equivalent of $5.35. I don't know if it's been split or anything since then, but it's equivalent regardless of $5.35. This was a 95% drop, okay? I'm going to tell you right now that no retail was buying this. Okay? Everyone hated this company when this happened. Selling books online, that's worthless, okay? We're in a financial crisis. .com bubble. I just want you to know, though, that if you would have bought that dip, I'm not saying that you should buy any dips, by the way. I'm just observing. You would have a 57,000% return. Almost 56,000. We'll just round it down. Okay? It's a falling wedge. 95%. Okay? This is only this AMC. Oh, my goodness. That's very red. This is only 76%. I'm just kidding. I know it's significant, okay, guys? Like, I'm not trying to, like, say, oh, you know, quit being such a baby or whatever. I'm just kind of, you know, I'm just observing things. I think it's interesting to look at. For those wondering, if you go all the way to the bottom of this wedge, and this bottom wedge does hold, it doesn't have to hold, by the way. Okay, it doesn't. That is not, like, the future and the past and wedges and whatever do not owe us anything, okay? I'm just making an observation here. If you were to drop all the way to the bottom of the wedge, it would be about 77%. And in the live stream, we did talk about the possibility of going down to like $15, 14, 15 bucks. Let me measure something right quick, and then we'll show the last Amazon falling wedge, and we'll cut out. Let me do the pre-market top. I think it's like 80%. Yeah, 79%. And then I want to do 80% down from here. Okay, yeah, that's like 14, yeah, like 1450, 79%, 1468. Okay, so keep that in your mind, okay, because we have seen that as well. If you measure the pre-market top, we have seen a 79% drop for AMC. So that kind of correlates with the other analysis that we did with the Fibonacci's, okay? So I just want to keep that in mind. And again, nothing is guaranteed, okay? As always, it's not financial advice. This thing could go to zero. I'm just saying, I'm just looking at the, you know, I'm looking at history, and I'm trying to put some things in context for you, you know, if that's something you're interested in. Make sure you smash the like if you have. And then this is another Amazon example, and look, I'm sure that I can find 1,000 examples on this chart and many other charts, okay? But this is a falling wedge again here from highs of the equivalent of $60 all the way down to $25. This is a 56.7% loss over the course of, what is this, 3 years, 3-ish years. And if you know, I don't have to do it again. You get the idea. All right, you would have made a buttload of money if you would have bought at any given time in this. Am I saying that that is what's going to happen at AMC? No, I'm not necessarily saying that. But what I am saying is that you need to contextualize, right? Contextualize your investment or your trade or whatever it is that you see AMC as for you. And understand that there is historical precedent for the move that AMC is experiencing. And actually, there is one of these wedges that actually looks exactly like it. It's this one. This Apple wedge right here, to me, Apple wedge, that's that's high quality stuff, man. I could go for an Apple wedge with some peanut butter on it right now. Sorry. I mean, does this not just have the same kind of, look at this, look. Hold on. I know I can do split screen, but it would take a little bit more time, so I'm just going to do it. It might actually be quicker, but Does this not have the same kind of attitude right here? I mean, look, I'm not saying that it has to do anything. I'm just saying, like, it does have a similar, you know, it's got a similar kind of tone to it. You know what I'm saying? That's all I'm saying. So, hopefully you enjoyed the video. If you did, make sure you drop a like, smash a comment, and destroy the subscribe button. Turn on your post notifications too, so you don't miss any of my future posts. And hopefully you enjoyed. And until next time, peace.